Hi, this video is about an intraday option buying strategy. So this is specifically focused on Bank Nifty options, specifically on weekly options. So we are trying to go with an option buying strategy just the day before the expiry and trying to buy out of the money options and to check whether it would end up in profits or not the next day. So in order to backtest this, so I wanted to backtest the strategy like if I buy out of the money options just the day before the expiry, and if I close it on the expiry day, what would be my returns? So basically, to start with, say suppose consider this date on 4th of April 2008, the Bank Nifty closed at 24129, the Bank Nifty spot. So we are trying to buy an out of the money call option here. So we just consider 2% here. So 2% from the spot is around 24,600. So you round it off, you get around 24,600 C. So the strike price that we need to buy is 24,600 C of the April 5th expiry, just the day before, just on 4th, we need to buy this particular strike price. So, so in order to check the price, so just the day before the expiry, the option price, the strike price that we considered is 24,600 CE. So that was closed near 3.8 rupees. So we just buy it during the close price just the day before the that's few minutes before the market close. And if you have bought at 3.8, the next day the market moved up significantly where the high was around 141 rupees. So the 3 rupees options that we bought almost went up as high as 141 the next day, however still closed at 84 rupees. That's almost 3600 percentage returns in just one day. So I'm really curious to find out, okay, so if I could make 3600% returns in just one day, and if I could do the same for every expiry, what would have been my total returns? So I wanted to test this. So since the inception of Bank Nifty weekly options since June or May 2016 to almost 2018, I tested every expiry considering the same, just buying 2% out of the money call options only, and to check what would have been the total returns. As you could see, they were only 1, 2, and 3. Only 3 times out of 95 expiries, only 3 times we were gaining significantly. All other times, whatever the money that we have invested has gone down. It's zero completely. So if you have put 1 lakh, so it's going to go zero. However, the 3 times that you see, the returns were so huge. So it's almost 2000 times or 2000 percentage of returns in just one day here, and here almost 8000 percentage returns in one day, and here 2000 percentage returns in another day. Rest all the time it ended up in 100%. I mean, whatever the capital that you have put, that has gone. That's all. That's almost 100% loss, but you were able to make huge returns still. So as you saw in the previous slide, so we were just making 3 trades profitable out of 95 trades, but all those 3 trades has returned huge returns. So the total summation of all the returns was around 4,283% returns. So even though 97% of the time, if all your trades were failure, you were still able to make a positive returns in just from 3 trades. It's because the money that you gained when you were right is so huge comparatively the money that you lost in your wrong trades. But remember, even though we were making great returns when we were right, the rest of the time no, we were actually losing the capital. So whatever the capital that we have put has gone to zero. So we cannot now say suppose if you are having 1 lakh capital and you cannot put all your 1 lakh expecting it to make 2000% returns or 8000% returns in just one trade. So instead of deploying all your capital at once, just segregate it. Like I considered investing just 10,000 every expiry, starting from first expiry to 95th expiry. I was trying to invest 10,000 every expiry, so that even if it goes wrong, I just lose 10,000. But if I'm right, I make huge returns. So as you could see, so I was considering losing money. All the 10,000 was considered being, going to zero. But all of a sudden, there was one expiry which has given huge returns. So it gone up, and again I was considerably, continuously losing money. And again there was one huge returns at one expiry where market moved up significantly. So from minus 3 lakhs, it has gone to plus 6 lakhs. And still, some again the rest of the expiries, the options, OTM options were expiring worthless. So it has gone to zero. Again, there were some expiry which has given stellar returns. So investing 10,000 every expiry, my total investment was around 9.5 lakhs around for the 95 expiries. Still, I have ended up with 45% returns. That is almost 4.2 lakhs of returns by the end of 95th expiry. So, with respect to trading, it doesn't matter. The winning accuracy is the least concerned one. It's all it matters is how much you make when you're right and how much you lose when you're wrong. So that has made this particular strategy ending up with higher returns of still 45%. So is this strategy really tradable one? So even though you see a 45% returns for a period of just 2 years, but you just make three trades right and 97% of the other trades are wrong. So practically, it is really impossible to trade this kind of strategy. So just the previous day of the expiry and buying an out of the money option and expecting the market to move up significantly the next day is fine, but the probability of such occurrences is very low. That is what we have tested historically. So not that every expiry that you see a wild move is not going to occur each and every time. So play safe, do not fall into such kind of strategies. So even though you make a good returns in one day or the other day, you could continuously lose money for the rest of the days or rest of the expiries. So that's it, and that's what I wanted to convey with regards to this option buying strategy. If in case you have any doubts or questions related to this, please post the same on the comments section so that we could clarify the same. Thank you.